Hello, welcome to my market update today. The macro scenario today was pretty stable with Brent crude remaining at about the 72 levels, which has been true for the whole of last week. The dollar index at around between 100.8 to 101. US interest rates also stable at the same 4.4, 4.5 levels. Uh, Indian in the 10-year interest rates also at about 6.7. So the rupee weakened marginally by about 20 basis points today to 95.38. So it is a fairly stable geopolitical environment because the mourning for the Iranian leader meant that there was no escalation from their side. So from a perspective of the market performance, let's look at the flows. Well, FIS, if you remember, had turned positive on Friday. Well, starting off on Monday, they were positive but very marginally, just about 200 crores. And DIS, who had become negative on Friday to 2,000 crores, flipped back to their normal style of about 3,800 crores of buying. So obviously you get good buying support, no major selling pressure. So all the indices, the cap curve indices ended in the green today. The large cap about 66 basis points up, Nifty, mid cap 45 basis points, small cap 75 basis points, and micro cap was only 21 basis points up. So those who have been following my track of tracking this will know that, well, there was no big selling pressure from the FIs on the large cap and the mid cap. So the DII's buying was spread, if you go by the indices, around the small cap and the mid cap and large cap spaces. The advanced decline ratio was very flattish today, 1400 is to 1600. So clearly this plus the micro cap only going up by 0.21% indicates that today the needy, that is the non-institutional domestic investors, were a little bit cautious today, a mix of profit booking and perhaps waiting for the result season. But though the result season is yet to really kick off in a big way, it starts with TCS on the 9th, there is a good news from the banking sector, pre-updates which are fairly good in terms of the credit growth. And also I think the consumer, Dabur and the Godrej consumer have given a good indication, and the auto numbers we already spoke about. So broadly then today was a risk on rally, and the reality continues to be an outperformer along with auto and consumer durables. So the rate sensitives. So clearly the easing of the crude is being read by the market as RBI is going to give a very neutral policy and no interest rate hikes are expected. So the only sectors not to do well were IT as usual and PSU banks, and both we know the reasons. We spoke last week on it, that there is a profit booking happening in the PSU banks, and some of the banks have not been reporting great results, pre-result updates from this perspective, and one or two banks have taken a big hit in terms of some one-time settlements for some cases. So this has kind of weighed down on the PSU banking space, which for some time now has been daily negative, and IT flipped back to its negative nervousness ahead of the TCS results. So fairly simple market today, where we saw DIS put in a little bit of money. 4,000 crores is a decent amount of money, but like I said, I expect them to kind of remain at these levels and not commit more till the earnings gives clarity, right? So basically the market has been fairly along expected lines, and I think this will continue till we get Wednesday. There should be two updates on the monsoon from the IMD. Though the way the Bombay city has been hammered by the monsoon, I think the market feels that the monsoon is normal, and that was clear in the results today. And the Fed minutes will be released, FOMC minutes will be released on Wednesday night, and Thursday you have your TCS and Asian Paints results. So essentially market will wait for these four triggers before it takes a decisive direction anyway. So consolidating market will continue in my opinion.